So it is the lowest 0.01. But when it comes to volatility 75, is 0.001. That's the lowest lot size you can use. Now, if you are using 0.01 or 0.001 is the lowest. So if you are using 0.01, if you do trade on currency with 0.01 with $100 in volatility market, you may blow your account because of the way it moves, the way it reacts, the way market moves with it, and then let me say the margin levels are. So those of you taking that, please, it's not advisable. Then the next thing is, let me share my screen. So when you take step index, the minimum loss size is 0.1. That is the algorithm behind it. So with 0.1 step index, which means a move against you is taking 10 cents. Is it 10 cents? Okay, $0.1. Let me put it that way. A move in your favor gives you $0.1. So if you are using the lot sizes, you must be careful of them. Boom and crash. Boom and crash. The minimum lot size is 0.2. The minimum lot size is 0.2. So automatically, when you are trading with $100, and then you are using 0.2, you are already trading with a big lot size. Based on the information I gave, trading with 0.2 is big amount, or you need a big money to be able to trade it. So let's note some of those things. I think the volatility 100 is 0.1, 0.2. Then we have volatility 100 IS is 0.1. We have volatility 50 is 0.005. 0.005. So be in that range. Even if you are trading with $1,000 account, you can still be in that range. All right. So if you have any question, you can send it through chat. I will go through. Then we continue from there. Then let's review our analysis that we did on steps and see the outcome. So at this point here, realize that market is nicely following the rules. Who took this trade on the demo? Probably. So market respected it and then respected our trend line. So at this point, the day with 17th July, we expect a bullish move on 15-minute time. That it bought nicely, but it bought, came back to the trend line and respected it. Now, these are all things that we do when it comes to trading. The direction of the market. Where is market going? Before you know where it is going, where is it coming from? After you know where it is coming from, is it ready to take the next turn? Then probably, is it a bouncing trade or is a breaking trade? Is it breaking or is bouncing? About all those things, your decision making becomes accurate. So when you know those things, then your decision making is successful. You also have time frames that are controlling the market at one point in time. So I think that will be the next topic in line. I'll teach it. So what happened is that time frames have power over the market at a point. So when 5 minutes is in progress or taking charge, 15 minutes takes over, 30 minutes or 1 hour takes over. You continue like that, then daily time frame. Now when daily time frame is taking over the market, you see something like this. Let me change it to daily time frame. So for instance, let's assume daily time frame is taking over this market here. You see people complaining, oh, why is it not buying? Why is it not buying? Probably they see market doing well on them. Maybe it seems it's overbought. So at that point, when those who using indicators like RSI, MACD, and all stuff, they feel that okay, it is time for market to buy. So once they didn't see it buying, they start saying words like the broker is manipulating the market and all those stuff. It's not true. Market has a direction. So the direction the market has is what it goes with. So we will always say that follow the trend. Don't unfollow the trend. When you follow the trend, you will make the money. When you don't follow the trend, you will make the money. Someone said I should go over the boom and crash. Okay, the boom and crash is 0.2. That's the minimum lot size. So what you do is I'll throw it back as a challenge to you. I believe everybody has their demo account. What you do is that just go and try the lowest lot size you know, and see if market will pick it. Once it picks it, that means that is correct. But then I will work on it for all of you. Okay, so let me take another asset for us to look at. Someone should just type in chat box which asset you want us to look at today, then analyze, see what we can spot. What asset? Okay, Euro USD. Okay, Mr. Kofi, it seems Euro USD is your friend. Okay, so let me switch to currency, and then let's look at Euro US dollar. Okay. Someone says VIX 75. Okay, so when we look at Euro USD, we are looking at VIX 75 as well. Alright, so as usual, you can use it the same way. I always remove bridge. So mostly, before you do your analysis, this is, let's say this is the last zoom. So this is 5, 4, 3, 2, 1, 0. So mostly let your chart be like this. Now when your chart is like this, it helps you to see at least from somewhere. So at this point we are seeing from 6th May 2021. When you drag it, you see from 24th March thereabout. So from 24th March, market was an uptrend and changed direction towards a downtrend, and it's still a downtrend. Something doing like falling wedge or something like that. We'll look at them. So let's go to 4-hour time frame. So mostly, if you did not look at the time frame at all, look at 4-hour time frame. If you want to go a layer, you can go to daily time frame. Now we have those who trade with time frames. They trade with daily time frame. You have people who only go with daily time frame. They are daily time frame traders. You have the 4-hour time frame traders. You have the 1-hour time frame traders. You have the 15-minute time frame traders. It also depends on your style of trading. So many people are used to the yellow, the green and red. Let's put it that way for now. Okay. So because we can add period separators now, we look at something. So when you look at the dotted vertical line, the distance between one of them is the period. So let's see how many daily time frames makes a period. I will now pick my crosshair, put it on the candle formation from the beginning of the period to the end. We have 26 bars. We have 26 days in this period. So if you are doing your analysis, it means that if you want to spot anything here, you should be able to know some of those things. Now, when you come to 4-hour time frame, you also see the number of candles that make a complete period, same as 1 hour. When you go to 1 hour, it becomes plenty or more closer. Let's zoom out. So that is the time frames and with period. I'm taking a period off because we are going to select the durations ourselves. Going back to properties and check period separators. Okay, so what we want to know is the next move, or where is this asset going. So I'm zooming out fully. So the first thing I will do to spot support and resistance. That's the first thing I'll do. So when we come to the top, before I will look for high of the period, or high of a certain period, and then low of a certain period. So let's say I want to deal with this year. I will now come and pick my tool. The year begins 2021 January. Bring it back a little. Alright, so somewhere here, January 4. So let's say 31st December. So between 31st December, this is our high of the period. This is highest market has gone. Let me see. So this is highest market has gone within this period. And then leave that one. Then the lowest has gone. And we are dealing with from 31st December 2020 till today. That's the data we are using. So after this is just HOD LOD, which is high of the period or high of a day, low of the day. But this one is more or less like the high of a period we are dealing with. So the next is to look for resistances. So I got something here, but my best fit is somewhere here. So now we have 3 resistances here: 1 touch, 2, 3, 4, and 5. Then I can also look for some other ones as market is moving. So we have what we call key levels as well, where market has make a rest as it is pushing up. So I will look through and spot this level here. So I have another support here. I have a support here, which means that currently market make an attempt to break this support before pushing out or reversing. So why is it valid? We have one touch here, then this is a little bit above it, and 2 and 3. Even if you go back to historical data November 5th, you have the same rejection here that make this support valid. Now, if you are, this is on a 4-hour time frame, so you can use this data to make your decision. You then look at it again and say, okay, so what can you spot again? Now, this is where logic comes into analysis. Now, when logic comes into it, you may, or I will still look at somewhere here to spot another layer of support, which was a resistance. So it was a support, then turned to a resistance at this level. Then I can also look at this point here, this whole area, as a resistance at the same time, which was a support again. Then when you are looking for another support somewhere here, now you didn't get any good formation here after this consolidation on the 4-hour time frame, because this is a news. The long candles, when we zoom out, it looks like a news. So the long candles are news, like we've talked about the last time. Now with this, some people those who trade with 4-hour time frame can read meaning into this data, but then you can equally look at it from 1-hour time frame based on your style of trading. Now when you come to the 1-hour time frame, you realize that the structure looks a little bit different. So you can still be able to spot other support and resistances within the 1-hour time frame. But let's say you are working here with this data. So currently, what do you expect market to do? We expect market to be bullish. Now, when it is bullish, where are you expecting your take profits? Where are you expecting to put your stop losses? So when it comes to my take profit, I will expect market to come to 1.18698. But that is the resistance zones, the resistance or the price resistance at that moment. Now when you look at all these places, there's more or less like a consolidation in the market, or a ranging, or more or less like a choky. There's indecision over there, then it pushed down. So those who are having friend of the trend, they would have already been in a sell from 1.22393. So they would have already been in a sell, enjoying this trade downward. Let's look at it on the daily time frame as well. When you're looking at it on the daily time frame, see that the market was an uptrend from 2017, then 2019 it started an uptrend. So some people position trader might even be holding this trade, expecting the next touch or the second touch on 1.17047 as their support, and expect market to push to and reverse to the next resistance 1.2238393. So this brings dynamics into the decisions or decision making in trading. So when these dynamics come, you now know the potential direction of the market, but you have to ask some few things. So someone will now look at it from this point to see, what can I get here? I didn't get anything here, but at this point I spot a trend line. Then somebody will also look at it from a point where to see if you can get out. Sorry. On this point, someone will also try to see if you can draw a trend line. And when you draw it on the daily time frame, it doesn't really look reasonable, but we have 1 and 2 points connecting. So if this becomes reasonable, it means that the next move you are expecting might not get to 1.22388. That's the next move you are expecting might not get there. Now you must validate that based on the type of trader you are to help your decision making. So let's go back to the 4-hour time frame. Now when we go to the 4-hour time frame, you realize that what you spotted is almost the same. Now at this point, where is market going? So could market reverse at this level, or it will come to 1.170? And what factors could you see? So someone will have to look at this structure. Since you are doing technical analysis, you can now decide if you want to use potential moving averages to know your dynamic support and resistance. You can also use your Fibonacci, which we will look at, but you have to look at patterns and see which patterns you are able to spot in the trend or in a market direction. So let's see if we can spot some things here. Now when we look at this, we can get a trend line here. Can get a trend line here, which is supporting as a resistance. And then someone can also see get another trend line here. Now when you are drawing the trend line, you don't force it to fit what you want to do. You are drawing a trend line, people force the trend line to match. For instance, somebody will say, okay, this doesn't look straight, so let me adjust it to this level. Maybe you are doing the wrong thing, maybe someone too is doing the right thing, but I spot it this way as the trend line. So this give it 1, 2, 3, 4, and 5. So it's telling you that this is becoming more or less like a diagonal strong support, or price is above it. And then we have 1 here and 2. This is not yet respected. But when you look at this, we have a drop here. So we have a pattern that we can spot from that level. Who can mention that pattern for me in the chat quickly? What is expected is market should break above or below, make the next decision. Market should make a break above or break below for the next decision. So when you are looking at your technical analysis at this point, news is not yet part of your technical analysis. So as a currency trader, you now add, so those who will buy here, and there are some people who will do your analysis and expect a bullish move here, they'll be disappointed. They will say, what happened at this point? What happened at this point? Let me say what happened at this point too. So all these points, maybe they are having another way out. But those who analyze at the top with a bearish move, they would milk the market from that point towards the direction. So you must know all those things. We're also going to look at what we call patterns and in patterns. Now you'll see pattern formation here, breakout patterns, reversal patterns, you see continuation patterns, and all those things. So if you are looking at all those things, you must learn and see how many you can spot You must learn to see how many you can spot. And when it comes to patterns, sometimes it's more or less like it's difficult to spot. Sometimes it's more or less like it's easy. But when you look at this level here, look at this level here, there is a clear pattern that formed. I can see more or less like a head and inverse head and shoulder that gave a proper retest. The market starts bullish from there. So when you're able to spot these, you'll be able to enjoy this market. Now let's look at it again from here. Let's look at it from here as well. Something happened here. The market push up. This is a reversal pattern. We're going to look at those names as well. Then we'll look at this point too. After this is a continuation pattern. Then there's a sharp drop, validating the continuation of the trade. But then it formed a quick reversal pattern at this point, then push up again. So in trading, now all these things that happen on the left should have happened on the right if there is no news, or relation to what happened when market was going up probably could have happened when market is coming down, but news make it look like it is not working like that, or it didn't work like that. So when you look at here, what we do was perfect. When you look at here on 1 hour, we are now on 1 hour time frame. What we do here was perfect, which means that the direction of the market. So at this point, there is a pattern that you see. When you zoom it out, there is a breakout and retest before the news push up. So the news pushing up, probably people would have made losses because based on the week of the news, I hit stop loss for people who don't know how to set their stop losses well. Or when you look at it too, it's rather the market, the week even came to respect something before continuing the move upward. So these are certain things that you must look out for when you are making your decision. Okay, falling wedge. So the answers are coming. We are looking at them, validating them as well. So these are the decisions you make in the market. Then after you get your confluence, taking candlestick into consideration, candlestick formation, price action, and whatever you are adding to it to make your style of trading. So at this point here, those who are trading on 4-hour time frame can say, oh, market is in consolidation, so you don't want to make any decision yet. The same way other people who are trading on smaller time frames would have been making something from it. So something like this, this app move is a news. But before the news, who can just tell me what was spotted here? It was validated as a W. So fall from here, push down. This on 5-minute time frame. So this is the retest to validate the W. So if you are not too sure where to enter, then probably on this formation engulf, this candle engulf this, that enter here and make this move quickly. Then this sharp drop then happen. So based on your time frame, decision making and all those stuff affect it.
With this one,
okay,
I can see W when I use the longer ones.
Okay.
And also small m inside.
Okay.
That's the one with the double top or
Okay.
so
Are you talking about this level?
yes.
This level here. Okay.
And then when you come down,
When it come here.
yes, I can see W at the same time.
Okay.
When I need the bigger one.
Okay. All right. So what happened is that we also have what we call patterns in pattern. So it's just like a lens. So when you are looking at in the thing, you are looking at so many things at the same time. But you have to now come into consensus to see which of them are you really looking at. Then where is market position and what are the possible expectations? Now remember, this is a smaller time frame. So somebody would have enjoyed this sell, probably. Then somebody would have enjoyed this buy. So based on your style of trading and what you are looking for, what matters. So if we are looking at this pattern, we can draw it straight this way, and then we have this is the impulsive movement. There is a correction here, impulsive correction like that. That's how it came down. So we can also just take this whole as one and also ignore this correction, then take it as one based on direction, on how you spot your support and resistances as well. So if we are just using this, then we are expecting the W. But if we are even looking at this here, this here, and then we bring it down, you look at it, taking off this looks like an M. But if it is an M, you have to expect a retest and the market will sell. But can a continuation, can a reversal, or can such pattern happen based on current market condition and market structure? That's what we must also look at. So when you go to 15 minutes, let's go to 15-minute time frame and look at something. When you go to 15-minute time frame, it's becoming a little bit clearer. But you still have that M-like formation in it. So it could also confuse some traders as well. Now, when you look at this point, you see that this candle, this particular candle came back to the same level. So we can validate all these levels here to here as one. And then look at it from this angle again. So when you are looking at on 15-minute time frame, it doesn't look like a W as well. It doesn't look like a W at the same time. It looks like a double bottom. But at the end of the day, that's why people trade on other time frames, have different versions of their explanations and then decisions they make in the market. Is that cool?
From what you said, it seems like whenever there is an M, you have to wait and then get a correction or a retest.
Okay.
And then you can continue selling.
Okay.
If you have a W, you have to also wait, or you wait for a retest or a correction, and then you always buy. Is that the case? That of W also goes with it. But we are seeing in this pattern, after the M we were saying that it has to go. We wait for a retest and then we can continue doing a sell. And the W we are seeing also, yes, when we neglect the major, the small center means we get a retest and then we can continue buying, right?
Okay. All right. So probably if I get the question right, we are looking at market structure. Then we have types of patterns. Now, when you're looking at a double bottom per se, you may not expect a retest. But if you are looking at a valid W, one, you don't expect the base to be the same. One will be shorter and one will be longer. Then, if you are looking at M, you will also see that one will be longer, one will be shorter. So, before the next move happens, you definitely must see. I look at it like a zone. When we are climbing a little, we'll see it. I'll also add, I'll add one of the ears for you to see what I'm talking about. So you must see a zone being created, because why do you see a zone? A zone comes, let's say, the first one come here, then the second one come here. So the space between the two gives you the zone. So probably after everything, you must expect a retest to confirm your direction. Now, by that time, it has broken a key level or a resistance or a support. So for it to give you that breakout, for you to expect a good breakout, how to what? See a retest. Confirm that, okay, market has broken a particular zone or a particular support or resistance. Now, that is what gives you the real confirmation. Now, when we look at the 1 minute time frame, let me take it off. Wait, let me just take off this again. Okay, so when we look at the 1 minute time frame, let's look at it from here. Then let's look at it from here too. When you look at all these places here, for instance, this whole area, see that this was a resistance, somewhere a resistance. This whole area can also be considered as a resistance, but this is a 1 minute time frame. So the move here, this impulsive move, broke the resistance successfully. So what we need to expect is market telling us that it's broken by a retest, and the impulse or the uptrend, the upward move, that validates it as that pattern you're looking for. Now, it also means that when you are looking at the patterns, probably there is a potential minor or weak support or resistance that will be broken. So after it is broken, then it now validates to you that, okay, I'm moving on based on the patterns you're able to see. So there's always a big question that we ask: how do you actually know that the thing is ready to move? Now, when you look at this level here, did you see a W or double bottom? I see it as double bottom. But this whole thing become one. Then when you look at this point, we have a double bottom here. But all these things, are they tradable? These are probably consolidating. We have a number of quality resistance at this level. So somebody will now see these two as double top, then make a sell. Somebody can also say, okay, I see it as M because of this rate retest or retracement, and then market continues. So these are the dynamics. So the ability to understand this and customize it makes it, or let it become like the psychology in trading. So let me just do something quickly, guide you guys. I want to make it simple. So I'm adding just let me say two things here. Let me add one. I'm adding this. So when you look at this is a zone, and then market break it. So at that point, it was a resistance, which I spotted here. So after it broke it, it must test it to give you a support for a push up. Then, when you also look at it again from the bottom, before market fly to the top, it validates it with a zone. By let me spot it as well for you. Jets and ships. So this whole area is validated. Now let's go to the higher 5-minute time frame. Okay, so when we go to the 5-minute time frame, the same thing happened. Validate this whole area as a zone before market shoot up. Now, at this point here, we only have a support, which was a zone on the lower time frame, and then it became a support or a mini support. Let's look at it from this angle again. So I'm actually using the tools to support my decision. But we see this is a resistance, a price resistance. Even there was a price resistance here. So before market move up, you realize that it broke this particular resistance. So somebody can also say that this is the end of the move. So the person can say, okay, I am validating here to be a double bottom. So even though I didn't make my decision from the bottom, I'm entering my buy here. But the question also is, at this level, some of the ES only helps your decision making. At this level, which key level is market respecting? So market is respecting this level, 1.17831. Market is respecting that level as its test, or that is why it broke and tested before pushing to the next level. So those are some of the dynamics that you must get when you're making the decision. Then you realize that there are a lot of consolidations here, or mini support, resistance, and resistance embedded here. But because this is a massive impulsive move, probably there are news or events in it, the move does not really respect it, end up respecting the major resistance at the top before it pushed down. So after it pushed down, it is now validating all these mini support and resistances as well. So let's take it from there. Someone asked me today, how do I set stop loss? So let's say I give a signal, maybe buy signal. What you have to do is that we have two ways. If it is our current price and you look on the right hand side and see that market is at your price, then you have to just click a buy here. For example, you just click a buy. Then so I just click a buy. Now the buy, you realize that is directly in negative. So the spread is the first thing that will be taken out of it. Now, if you are now setting your stop loss and take profit, then you will come and double click. I'll show it on the phone. You will come and double click. Then the price for the stop loss that was given, you are going to write it here. So let me say I bought and I'm putting my stop loss at 1.17900. You see it has come to modify. So I'll click on modify. So let's say I'm putting my take profit at, let's say 1.18020. Then I'll just modify. So below is the stop loss, then above is the take profit. Now, the next other thing is, let's say I gave it to you, maybe buy Euro USD at maybe 1.8020, and then market is not there yet, but it's getting there, or you are making it a pending order. You come to new order here. So once you get to the new order, you see volume. The volume is your lot size. The volume is your lot size. Then you see your stop loss, see your take profit. So probably, maybe I want to use 0.01. So it means that I'm buying 1,000 euro, or you are using 1,000 euro or something like that. So if you use the 0.01, that's your lot size, then your stop loss value, you input it there. Then your take profit value, you input it there. Now, it also depends on how swift you are. There are some people who will take time. Now, if it is a signal you develop yourself, no problem. But if it's a signal that was given to you, maybe by the time you finalize the whole process, market is far gone, then you just have to enter the buy and modify later. You enter the buy, modify later. It's very simple as that. So with the new order, you put everything here. Let me just quickly go through the pending order. The pending order, we have a pending order where you see your buy limit, sell limit, and stuff like that. Then we give you a price, or you set a price that, okay, when market gets here, it will do A, B, or C. That gives your pending order. And your price you want to put it is here, and your stop loss is also here. That is how you do those stop loss and take profit stuff. So we are going to end it here for tonight, and we continue tomorrow. Any question?